Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a bit of a sluggish day for us. We have the Nifty, which is down around 0.5%, and the Midcap index, which is flat with a little bit of a negative bias, but the Bank Nifty, which is underperforming at this point in time, so the Bank Nifty down around 0.7%. It has been a buy on dips, which has really taken place for the Midcap index, but let's see whether it sustains from current levels. One of the key reasons for the kind of weakness that we're seeing is also because of the pressure on Asia. So most of the Asian indices are down and out in today's trade. So that should come up for you. But separately, a lot of stocks in focus on account of numbers. ONGC coming out today. Marico also coming out with numbers today. And in terms of a couple of stocks reacting, HEG, that stock very strong quarter. Dilip Bilcon, which is outside the ASM list now. Dr. Reddy's, which has gained around 6% this week. And Piramal Enterprises on hopes that maybe there could be that demerger of its pharma and financial business soon enough. So a lot of stocks to discuss over the span of the next 1 hour. Hi, Prashant.
Ekta, hi. Before we go any further, I'd just like to point out that we are off the lows. I mean, we're off the lows in a significant way, at least for the small cap and mid cap indices. The intradays, if you can put them up, the Nifty is up almost 0.25% from the lows. The small cap index is up 0.75%. That's 0.75% from the lows. Mid cap index is also up about 0.75. Actually, the mid cap index is just about turning green. So that does bode well for the health of the broader market, that the broader market is starting to pick up steam already and almost turning green in the case of mid caps. And the Bank Nifty is also about 0.25% lower. I guess it's natural when markets sell off because of big global headline and political risk and trade headlines, etc. What gets hit is the large stocks, Nifty stocks, and the broader market doesn't get that much hit. But even then, the fact that at an aggregate level things are off quite a bit from the lows, I think would put us in a good stead. This especially in the backdrop of the rest of Asia, which actually the last I checked before I walked in, is still actually down and out. I mean, the Hang Seng is pretty much at the day's low the last I checked. You got the Shanghai market, which is almost at the day's low. So there is no recovery. You've got 3% odd cuts in big markets across Asia. And here, at least in the broader space, there is some recovery setting in. So let's see if this can seep into the Nifty, the large cap stocks, and that index starts to recover as well. But Sudarshan Sukani of S2 Analytics is with us. Sudarshan, morning. Thanks very much. Your sense of things and what would you do?
Yeah, good morning. Well, my sense for the last 3 days has been that the Nifty is now going into a trading range, and a trading range takes time to define the boundaries. So we are in the process of doing that. Once we sense that a market or an index is going into a range, there is no trade because the trade becomes random. The very reason it goes into a trading range is because participants are confused on the next direction. So we don't call a direction when most of the smart money says we don't know where it will go. So at this point, there is no trade in the Nifty. Let the index stabilize and define the boundaries of that range. Then we will start getting these trades. So there's no harm in being patient for a couple of days more. Individual stocks keep on offering opportunities, and that's exactly where we should focus on. Ekta knows I've been talking about pharma for so long now. It's bottoming out. It's entering a new bull market. And Ekta is an expert on that. So I think that theme continues. It's an investment theme really, but for today I'm also suggesting buying Walk Pharma. You know, these stocks keep on coming. See how Dr. Reddy had that gap down, and then it's recovered almost all that gap and almost filling it. Walk Pharma is a buy for today. That's from the pharma sector. The other is United Spirits. Some things are not going to go down and the consumption will continue. I suggest buy United Spirits. On the back of bad results, it actually bounced up. That tells us there's a lot of buying and a lot of strength in it. So 2 stocks for buying. PVR continues to be a short sell. There was a gap down. That gap continued to be weak, continued to remain. The stock is sort of weak, breaking support levels. So 2 longs and PVR as a short.
Okay. Sudarshan, that's correct, but Dr. Reddy's is up around 6% this week. I wanted your thoughts on that one in terms of the technicals, as well as Reliance Industries. You know, stock is around its record highs. It's giving you an opportunity to buy today, according to you, based on this 2% dip?
Well, for Dr. Reddy's, when it gapped down, I said we should still remain a buyer there. Oh. And that gap is getting filled up on the upside. It's an investment buy, and it's worth buying into. Even at current levels, if you are a trader, it's a good time to buy. Don't worry about the 6% rally. It should rally more. For Reliance, if you are an investor, it should be in your portfolio, and a 2% decline gives you an opportunity to buy it that much cheaper. But Reliance is going to follow the Nifty, so it may or may not be the last of the correction.
Okay, let's get some questions to you. So we've got the first question, which is coming in from Milind. You got 1,000 shares of Vedanta. Cost is 295 rupees each. Wants to know the long-term view. Sudarshan, Vedanta?
Well, Prashant, you know, 295 and 212 are very different values. That's where the market in Vedanta is now. So the long-term view is that Vedanta is bottoming out. That doesn't apply to the metal stocks in general, but specifically to Vedanta. Now that process is very time-consuming. It can bottom out in 3 months, in 6 months. But the gentleman now has no option but to hold on to what he has. You can't exit when a stock has just started bottoming out, building a base. So just stay with it. It'll take its own time, but hopefully you'll recover your investment.
Okay. All right, Sudarshan, we're going to let you go and speak with you later on in the day. Thanks very much for joining in and taking us through all of those technical calls. But we do have more strategies lined up. CA Rudramurthy joins in to tell us what he's strategizing today. So Rudramurthy, over to you. Stocks as well as index call.
See, first of all, a word on index positionally. On Nifty futures, we have seen a gap at 11,180 to 11,225. This gap is definitely acting as a strong support, and positionally keeping stop loss of 11,180 on Nifty futures, every dip has to be used as buying opportunity. And similarly on Bank Nifty future, 27,400 is a very strong support, and I don't see any chance of breaking this, and risk reward at current level is definitely buy on every dips. When it comes to stock specific call, I have a buy call on Adani Port. See, Adani Port is seeing clear accumulations at levels of 390, and once it breaks 405, it will just fly. Risk reward is very favorable on charts for going long on Adani Port. Stock can rocket towards levels of 440, and even further up move from 440 can be expected. So with a stop loss of 390, I'll be buying Adani Port for a target of 440 in futures. I have a second buy call on Balkrishna Industry. This stock is seeing strong accumulation at levels of 1,180. Every dips is getting bought, and even delivery based buying is seen in Balkrishna Industry. This stock can definitely go further up from current level, and I am keeping a higher target of 1,310 on futures with a stop loss of 1,180. And to have a hedge against two buy call, I have a clear sell call on SRF future. SRF future is showing clear signs of resistance and sell off on every rise. So this stock can see huge downside targets of 1,550. So with a stop loss of 1,750, I'll be selling SRF future for a target of 1,550.
Okay, interesting names there. Rudramurthy, thank you very much. Appreciate you joining in with those trades. Well, the pressure is coming clearly from Asia, and in turn it's coming from the US. What's basically happened, of course, is that the amount of goods on which tariffs are being talked about is the same. I mean, you know, it was talked, $200 billion is not a new number. It was being talked about earlier as well. But what seems to have happened is that the tariffs which were being spoken about was 10%. Now we're not talking about 10%, we're talking about 25% on the $200 billion worth of imported Chinese goods into the US. Well, Jeff Lewis is joining us right now on the phone line. He's with Manulife Asset Management. Jeff, thanks very much for your time. Good morning. What would you make of it, Jeff, and how serious does this look?
Well, I would see this as just part of the rhetoric, because I think if you have a 25% tariff on 250 or 450 billion, then that really is a declaration of trade war. It would be particularly difficult, I think, to find Chinese imports of electronic components and those kind of things which would not actually cause extreme economic pain and damage to U.S. companies. So I think this is part of the rhetoric. I don't think that immediate introduction of 25% tariffs on virtually all Chinese exports to the U.S. is what we're going to see. What's been worrying people is that China and the U.S. haven't been talking in recent weeks. Steve Mnuchin now appears to be trying to do something about that. And I think that's what we're looking for now, is for the two sides to start negotiating rather than just raising tariffs from a distance.
Jeff, what's your view on how money is, positioning itself into the U.S. markets, based on even what the Fed has said about the U.S. economy, calling the economy strong? We had good GDP data as well. Do you think that there's fresh money which is going to be deployed in the U.S. market, irrespective of what's happening with this trade tariff fear, as well as at the behest of what emerging markets could be receiving?
Well, I think that if we can put aside the issue of a trade war for one moment and look at the results that we're seeing and look at the performance of the U.S. economy, then it has to be judged to be pretty good. So it's this trade uncertainty, I think, that is really keeping investors back. And, of course, that's a bigger risk, I think, for the emerging markets, particularly the smaller trade-dependent economies like Taiwan or South Korea, than it is actually for a large continental-sized economy like the U.S., which doesn't really depend to such a huge extent on trade as the driver of growth. And you could actually put China in that bracket as well.
Okay. All right. And what would your position on India be?
Well, we've been looking at India as being one of the larger economies which is less at risk from trade confrontation because it is more domestically driven. It has been doing a bit better recently, and there's less uncertainty, I think, over economic policies generally. We do expect the RBI will increase rates again because we've seen inflation pick up. It's been a bit faster than we'd expected. There have been some macroeconomic hiccups, but we think that the long-term position still looks, the long-term story for India still looks pretty strong amongst the emerging market universe.
Jeff, it's a pleasure. Thanks very much for your time. Appreciate you joining in with that commentary. So, I mean, the crux of the conversation with Jeff essentially pointing to essentially saying that this is more rhetoric. But, of course, I mean, it's concerning nevertheless. We'll take a very quick break here. We'll come back. We discuss what's happening in the commodity space. Manisha is going to be here. Jonathan Barrett, a CIO of Probis Securities, will be with her. And he's going to be talking about metals. Stay tuned. Okay, welcome back. So, you know, that recovery that we were talking about, especially in the mid-cap side, isn't picking up more steam. We were flat, almost in the green in the mid-cap index when we started at 11. We're down 30 points, so it's faltering. 60 points lower on the Nifty, no additional damage there. And the Bank Nifty remains about 0.6% lower as well. Manisha is here with a roundup of commodity action. Metals get hit whenever there is talk about trade wars and trade spat between China and the US. Manisha, what are we seeing?
Thank you so much for that, Prashant. Yeah, even as it may be a rhetoric, as we've seen in the past, but we have seen US and China actually get on with those lists. And China has said that it would hit back if actually proposed or actually implemented 25% on Chinese good imports. So that's, of course, one part of it. But the other really is the weak Chinese economic data that we have been seeing the whole of last month, the increasing supplies for many of these metals. Also, China increasing transaction fees for a couple of metals is something that has hasn't gone down so well. We have seen further profit taking or winding down of positions because of that as well. The strong US dollar, of course, has been yet another reason which has weighed on all of these commodities. So when you look at the last one fortnight or a month, most of these commodities or the industrial metals for that reason have come down sharply. Copper, for one, is down nearly 10% in last fortnight or so itself, and zinc, of course, has been an underperformer, as we have seen. Nickel prices declined 5% in last 2 trading sessions in the month of August itself, so it hasn't gotten any better for many of those metals there. Jonathan Bharat now joins us to give more sense into that. Jonathan, hi, good to have you. First of all, the US-China trade worries that the markets seem to be tackling with right now, where we have seen a sell-off across asset classes. And of course, the industrial metals have been hit hard. What is your sense on that?
Manish, good morning. Look, a lot of volatility, there's no doubt about it. I guess speculations of trade wars always concerns, but I think you hit the money when you mentioned 3: stronger US dollar, trade concerns that are certainly there, and also weaker Chinese data. So I guess all those combined sort of presents that bearish picture. But when you look across other parts of the commodity spectrum, other commodities which are attributable to China are actually holding up quite well. So it's an interesting picture, and I think when it comes down to the base metals, we should be getting, or hopefully getting, close to a low somewhere, particularly for copper, which is one which we're focused on.
How are you looking at the Chinese economic data as well on the other side? Because whether it is the domestic investments or it's about the factory orders, almost all of those numbers have been on the weaker side. Going forward, how much would that impact the metal demand or prices?
Look, it is, I mean, the picture we've seen out of China is one that is slowing. But we've also seen a picture where, the PBOC and, is looking to stimulate the economy. And we've seen a lot of stimulus throw into it. So I think this does take time. It's not something that happens overnight. So whilst we are seeing a weaker economic data coming out of China, you have to think that they're throwing a lot of stimulus at the market. So this should actually evolve into demand. So that's where I get this feeling that commodities are under pressure. But I think we'll be coming close to a low somewhere, or base metals under pressure, but we'll get to a low somewhere.
The other, perhaps a supportive factor could be the China pollution concerns, and we've seen further cut down in many of those metal outputs. Where do you see that leading into, especially as we hit more smog as we get closer to winters there? How would you look at the metal space with that in mind?
Well, it's interesting because the point you've raised has allowed us to look at, say, iron ore, for instance. And iron ore in itself, has held up remarkably well in the face of base metal markets under a lot of pressure. Now, this commodity, iron ore, has, in my mind, sort of given me the go-ahead that we are getting low in some of the base metals. When you look at the blue sky policies which has been put in there to reduce smog, when you look at the One Belt, One Road policy, and you look at the stimulus, you get this picture that we should be getting close to a low. But iron ore is held up, and I feel if iron ore is held up, that should leach over to the base metal complex. It hasn't yet, but I think it will.
One final question, Jonathan. So as you said, most of these metals perhaps are closer to their lows. So what is the risk that you see from here on the downside, and how much of an upside would you then expect from here?
Look, I think we could get a sizable bounce from here. The other factors, say for instance on copper, remain real, and we should be looking for deficits. So I get a sense that we are coming slowly to a low. How much further can we go from here? I don't know. But once we do get that sizable bounce, that would cement a low for us, and then I think you can start to trade to the top side.
And any favorite that you're picking up? I mean, you've been mentioning copper for sure, but anything else that you have your eyes set on?
No, copper's the one at the moment. I sort of feel that it's starting to feel like a low. It's certainly been hit quite hard, and I love the concerns that we have over labour and also deficits. Stimulus kicks in over in China, then they're the largest consumer, so it's got to turn around.
All right. We'll let you go at that, Jonathan. Thank you so much for joining us. So clearly, much of the negative factors have been taken in by the prices. And from here on, a sizable upside in the metals can be seen. And copper is his favorite there.
Manisha, thank you very much for that. So that is interesting chat on the commodity space, metals in focus. We take a very quick break here with the news that we're down 70 points. So 11,276 is where we're at. The mid-cap index has lost more. I mean, from turning almost positive, we're down 40 points. So this is not looking all that great. 1,100 stocks lower, 900 stocks higher. We get you some previews. Marico and Indiabulls Housing are amongst the two big numbers today. We get you expectations in terms of what to expect. Back in 2.